Hey there guys, welcome back to InfoFlow. Today's video is going to be a fabulous one. In this video, I'll explore what made Michael Burry so sure about the imminent financial crash. What makes him believe that a greater one is looming that will change a generation? And how can you help safeguard yourself and your family from falling into any risk that will cost you all? Michael Burry, the crash that will change a generation. Michael Burry, the hedge fund manager who famously predicted the housing market crash of 2008, is now warning of an even bigger financial crisis on the horizon. In an interview with Business Insider, Burry said that the next crash will be worse than 2008 and will change a generation. From the old saying, when it rains, it pours, it means that when a good or bad situation happens, another good or bad situation follows in tune. Since the beginning of the year 2022, there's been an economic downturn, most specifically from the stock market. Born in 1972, Burry began working as a neurology resident at Stanford Hospital and later as a pathology resident. He then transitioned into hedge fund management and began focusing on investments in distressed companies with great potential or value appreciation. During this time, Burry witnessed firsthand the effects of the 2000 dot-com bubble burst and the 9/11 attacks that led to economic damage in the United States, which was already suffering from a moderate recession. Burry has just recently claimed that the stock market, crypto market, and other assets are about to experience an epic crash. But the question is, how soon will these happen? Do you strongly believe in these bold claims of Burry? Let us know in the comments section down below. This isn't the first time Burry is making such bold claims, as he's predicted a similar situation in the past, which eventually did happen. But I'm sure you and I wouldn't want such a thing to happen, as we all know the consequences that we could be facing. In 2000, Burry closed down his website, where he's always advised people on the right choice of investment. He went on to start his hedge fund called Sign Capital, and within 4 years, he was already managing a whopping $600 million. It got to an extent where he had to reject money from new clients so he could have more focus on the investment deals he had with his current clients. Before we go into further details, hit that subscribe button so you stick to all the information and videos that we'll send your way. Burry has always been zealous about having his own investment company, and he studied a lot before getting to that stage. It was most of his studies that helped him in making wise investment choices and attracted more people to invest with him. Due to Burry's high intelligence in investment, he was able to know when danger was ahead. This made him always change his investment style whenever such a thing was about to happen. When Burry decided to short the market due to his analysis that subprime mortgages and related bonds were prone to lose value, some of his clients weren't happy with this decision and pulled out their invested capital. Well, it wasn't their fault as they didn't have the foresight that he did. However, in the long run, Burry gained massively from his prediction along with the investors that trusted in him. This shows that in some stages of life, accepting to take risks that people don't believe in can be a turning point for you. Burry's predictions have now made him a popularly known figure worldwide, as he has lots of followers on his social media accounts who are always keen to see his updates. Michael Burry is a great example of the importance of research and due diligence. After spending months poring over data and analyzing the subprime mortgage market before making his fateful investment, this careful planning and analysis paid off handsomely in the end. The 2008 financial crisis, also known as the Great Recession, is no news to any one of us. The event was an eye opener that everything cannot be rosy and there's a need for us to always prepare for the worst. According to a quote by American investor Robert Kiyosaki, he said that while a financial crisis can be a horrible time for average ones, it's also a great time for professional investors. Looking at the statement on the brighter side, it's quite true. A recent example is the COVID-19 pandemic, where a lot of people were losing, but a few others gained massively. Elon Musk is a typical example in this context, as he eventually went on to become the richest man on earth, surpassing Amazon billionaire Jeff Bezos. But wait a sec, do you know what exactly this market crash means? The market crash is a sudden and sharp decline in asset prices. It's typically associated with a period of panic selling and can have a profound impact on the economy. A market crash can occur in any asset market, but is most commonly associated with the stock market. A market crash is typically triggered by a sudden and unexpected event that causes investors to lose confidence in the prospects of the market. This could lead to a rapid and dramatic sell off of assets as investors attempt to cash out before prices decline further. Market crashes can have a ripple effect on the economy as they can lead to a loss of confidence in the financial system and can cause a decrease in consumer and business spending, as well as cause businesses to close and people to lose their jobs. On the other hand, when a bubble bursts, the price of the asset plummets often, causing widespread economic chaos. Investors are typically the most affected when a financial bubble bursts. This is because they often have large amounts of money invested in the asset that has lost value. Non investors can also be affected, however, as the economic recession that follows the financial bubble burst can lead to job losses, wage cuts, and a decrease in overall spending. Michael Burry is now only focused on one commodity, which is water. This statement shouldn't get you thinking too much. It's just an eye opener. To let you know what Michael Burry has been up to and how you can leverage his trading methods into yours, you might ask yourself how it's possible to invest in water, especially since the future market has been trading things like oil and gold. Well, don't be surprised by this, as water has just recently joined the trading market as well. If you don't act fast as well, you might be part of the many who weren't aware of the new development. Benjamin Franklin, the United States' founding father, once said that when the well is dry, we know the worth of water. Burry's warning should be taken seriously as he has a proven track record of being correct about major market movements. His predictions about the housing market crash were spot on, and he's now warning that the next crash will be even bigger. This is a financial crisis that investors need to be prepared for. Other countries are taking a variety of measures to try to curb the dollar's increase against their currencies. Some are intervening in the foreign exchange market to sell dollars and buy their currency, while others are letting their currency float more freely. Some countries are also raising interest rates to make their currencies more attractive to investors. Just recently, the value of the pound saw a record low of 1.1407 against the US dollar. The last time such a thing happened was on the 26th of February 1985. Greg Jensen, the co-chief investor of Bridgewater Associates, is one of the economists who have backed Burry's claim about the impending Great Crash. According to Jensen, it's very much impossible for us to go back to how the prices were before the COVID-19 pandemic. With all the recent downturns and massive crashes, Burry still claims we're yet to hit bottom. How true can this be? If you're still going to see a more severe crash, then surely we're heading to a greater crisis that would be worse than the Great Depression itself. Burry recently deleted a tweet in September about the crypto market, meme market, and SPAC crashing. You can as well build on this and reevaluate the choices you make to not fall into any form of loss. With the S&P 500 index reducing drastically, there's a need for you to take caution. One way to stay safe is to invest in companies that are less likely to be affected by the market downturn. Another way to stay safe is to diversify your portfolio. This means investing in a variety of different asset classes such as bonds, real estate, and cash. By diversifying, you can minimize your risk and protect your portfolio from losses. When the stock market tanked in 2008, many people thought it was the end of an era. But as we all know now, that wasn't even close to being the case. The Great Recession was a blip on the radar for the market, and there are even more impressive booms and busts waiting for us in the future. Bitcoin's price has dropped 66% from its high in November of 2021 when it was $65,000 to as low as $19,000 as of October 2022, making Burry's prognosis of a worsening fall seem very likely. At this point, the ball is in the court to be very careful with any investment you venture into. So stay diversified and don't put all of your eggs in one basket. Burry pointed to several factors that he believes are setting the stage for another major market correction, including high levels of debt, inflated asset prices, and complacency among investors. He warned that the next crash could come sooner than anyone expects and advised people to start preparing for it now. Burry likened the current situation we're in with the December 2007 levels, and from his analysis, we're sure in a mess. Burry compared the present economic collapse to an overcrowded theater with just a small exit, and as investors rush to quit the market, they either crush others or get trampled on. The crypto crash, which saw a massive price drop right from May, was caused by a perfect storm of events such as the recovery from COVID 19, high inflation rate, the Terra Luna crash, the Russian Ukraine war, and supply chain issues. All of these factors led to a decrease in demand for crypto and a consequent decrease in prices. The crash was exacerbated by the fact that many people had invested heavily in crypto in the hopes of making a quick profit, and when the prices began to fall, they began to sell off their holdings, leading to a further decline in prices. That's all for today, guys. Do you have any contribution to the topic that was discussed? Feel free to let us know your thoughts in the comments section below, and don't forget to hit that like button and subscribe to our channel for more videos like this if you enjoyed this video. Do check out the next one. Bye for now.